Good morning, students. Today we are starting our virtual coaching classes for CA Final Paper 3 Advanced Auditing and Professional Ethics. And we'll be starting with auditing standards topic. Students, you are aware that this part is covered in our section 1 and it carries weightage of 25% to 40%. Minimum 30 marks to maximum 48 marks it can go. And you have already studied standards on auditing at intermediate level. So it is very important topic, students. So you need to understand the standards very carefully, as it will help you not only in fetching marks, but also it will help you in future when you will be chartered accountant and you will be carrying professional work. So please make your notes carefully and keep your note pen and pen ready and note down and prepare your own flowcharts after going through the classes and reading the bare standard at least. Prepare your flowchart. What is the standard's name? What is its scope, objective? What are the auditor's duties and responsibility? How auditor should report? And what are the additional requirements given in that particular standard? So that you are able to understand what is the question being asked in the examination, not only in form of multiple choice question, but also in your descriptive question part where case scenarios based questions are being framed and asked. So, student, you need to be very carefully study the auditing standards. Further, I would like to inform you that you must have gone through the announcement which is being recently hosted on the website that your CARO 2020 will not be applicable for May 2021 examination. So you need to study CARO 2016, and for that study material means academic update part, amendment part is already being posted on website for final audit also, and for old syllabus as well as for new syllabus. So you can go through the same carefully. In addition, after studying the standards and your syllabus, you can also practice with the help of multiple choice question and integrated case scenario related booklet. So students, wish you all the very best, because I would not like to be taken so much of time. So we are starting with very eminent faculty, and you are well known. He is CA Achal Jain, and he'll be taking you through essay 230, 250, 260, 265 in today's session. And we'll be carrying in next session also all those important standards and which are not covered at intermediate level, or which are covered at intermediate level, but they are very, very important. So we'll be covering all those auditing standards, and then we'll be going simultaneously. We will be covering the topics. So students, wish you all the very best and have a great learning experience. Achal Jain will be taking you through auditing standards for today's session. So I'm requesting Achal Jain to start the session.
Thanks, Karna.
Thank you. Thank you so much.
Thanks, Karna. Good morning, students, and welcome to this session on audit. So today we plan to start with certain auditing standards, as Karna has mentioned. In respect of these auditing standards, one thing which we need to understand is that all of these auditing standards are mandatorily required to be followed by the auditors. So it's similar to what we do in case of accounting, wherein the accounting standards are required to be necessarily followed by the accountant. So same is the case over here. So that means if we are auditing any entity, then we are required to ensure that all of these auditing standards have been taken care of. Secondly, all of these auditing standards provide us a detailed guidance in respect of various audit procedures which are required to be performed. And this is all which comes down to the audit of the financial statements. So that means that whenever we are auditing the financial statements and we are focusing on the audit procedures, we are looking at the audit procedures which are relevant from the perspective of assessing the risk, or which may be relevant from the perspective of, say, for example, determining the materiality, which may be relevant from the perspective of assessing the controls which may be relevant to the preparation or the presentation of the financial statements. So all of this comes down to the auditing standards. So that's why without auditing standards, if we are really auditing an entity, that may be a big miss from the audit side. But we have also seen that auditing standards are at times not followed in totality. For example, let's suppose we have many auditing standards and we have also applied, say, most of the auditing standards in case of an audit. But some of the auditing standards have not been followed. Why? Because the auditor believed that he really had an idea about the audit procedures on the basis of the experiences which he has had gained over the years. But that is again not allowed. Auditing standards are required to be followed in totality. Yeah. So that means each and every auditing standard becomes important to us. We also understand that you have gone through this series of auditing standards at inter level, but there are certain auditing standards which you have not covered at the inter level or maybe not covered in detail. So we'll also be focusing more on those auditing standards during the course of our discussions. Plus, we will also be looking at various practical examples in terms of various situations which may come across during the course of our audit, and we'll just try to analyze that with the given guidance that we will be discussing, how should we really take care of those situations when it comes to the application of all of these auditing standards in those scenarios. Yeah. Plus, if you have any queries, any questions, I would request all of you to just keep sharing and we'll just keep discussing that at regular intervals. If you also have any practical situations which you may be dealing with in terms of your clients or in terms of the audits or any other engagements that you've been discussing, so it will be good to have a discussion around that aspect as well, because through this we'll be just able to have this knowledge sharing session. Before I move on to the auditing standard for the day, I'll just quickly tell you some of the basic things which are necessarily required to be followed by the auditor. And this will be, I would say, a process which an auditor is required to follow. Now, in terms of the process, we can say audit can be broken into 4 stages. First stage is about the planning. Planning is like any other activity that we plan, any other process, any other event that we plan. So we do a lot of planning for performing that project, for performing that activity, for performing that process. So same is the case of audit. So audit is similar to any other project that is required to be executed. So that's why in case of an audit, planning is of extreme importance, because if the planning is not done properly, then there are good chances that its execution will also not be performed in the desired manner. So that means first step for any auditor should be to plan all of these things in advance. Next comes the execution. Execution means application of all of these planned procedures which the auditor would have done. Now it may come down to assessment of the internal controls. It may involve the application of various audit procedures which the auditor would have planned. It may also require certain activities to be performed by the audit team, which could be in the form of, checking of the invoices, or say reading the contracts, or we can say inquiries with the management. So all of these is nothing but the part of execution. Once both of these are performed, then we will say that the audit is done, and now comes the time of making the conclusions, which will also be going during the process of execution, and that is called as the third stage, that is about conclusions. Conclusions in respect of various activities which are performed by the auditor. And once the conclusion is done in respect of various activities or various audit procedures, then comes the time when the auditor decides as to what is he going to do in terms of his final audit report, and which can also be considered to be the final reporting by the auditor, or we can say the reporting by the auditor, or issuing the audit report, because that forms the main deliverable on the part of the auditor. So during the course of our discussion, we will use these stages at various places. The only aspect that you need to remember at every point of time is that which stage is relevant for which type of procedure and how is that really relevant in the context of overall process. That means this entire audit process. Okay, yeah. Now moving further, we will be starting first of all with the auditing standard on audit documentation. This is SA 230. Now, whenever we perform an audit, we generally think that if we have performed the audit, if we have performed the audit procedures, then the audit is all done. Now, how do we really perform the audit procedures? Say, for example, if there's a client place, we go to the client place, we are required to do statutory audit of the financial statements, and let's suppose the targeted period for completing the audit is 2 weeks. So we'll ensure that all the audit procedures that we were required to perform in respect of obtaining the true and fair view of the financial statements have been performed. So let's suppose it's a team size of 3 persons, so they have performed all the audit procedures. And how did they perform? They checked the invoices, they did the ledger scrutiny, they also went through the contracts which were required to be analyzed. They also did a lot of inquiries. Yeah, so a lot of procedures were performed. But unfortunately, none of these audit procedures or none of the work which was performed on the field was documented. Documented means, let's suppose if that was not really put on a piece of paper, that was not really noted in any of the working files of the auditors, because that was not really known to the audit team. Now let's think of the consequences. Say a team of 3 persons visited the client for 2 weeks, they performed a lot of work. Now, after the work is performed by these 3 team members, there would be a senior of the audit team members who would really like to draw the conclusions on the basis of procedures which are performed by these 3 team members, so that he can do the final reporting. He can have discussions with the management of that client, and he can then, on the basis of all of these procedures, issue the audit report. Yeah. Now, because nothing was documented, nothing was really noted down by all of these team members. So when they will be getting their work reviewed by the senior, when they will be sitting or discussing all of these audit procedures with the senior member or with their senior, it may happen that some of the points or some of the procedures which they performed on the field are forgotten. So they don't remember, even though the work has been performed, but they don't remember. Possible? Yeah. Number 1. Number 2, it is also possible that some of the important procedures which were required to be performed were not performed. Once again, because nothing was documented and nothing was brought out in a clear manner as to what was really required to be performed and what has actually been performed, because that has not been documented. Correct? And let's suppose, even if this entire audit process gets completed in the same manner, that means without documentation, then tomorrow, when this audit firm, or we can say this auditor, who would have issued the audit report on the basis of all of these audit procedures which were performed, he won't have anything in terms of the documentation. If he becomes subject to reviews through some external authorities, and reviews could be of any type. Let's suppose any authority wants to check as to what was really done by this audit firm or what was really done by the auditor. So they won't have any evidence. Yes or no? Yeah. Now, to avoid this situation, or to have a situation wherein the auditor is clear in terms of what was done and what was required to be done, one thing which becomes mandatory is called as audit documentation. Audit documentation means that whatever work is performed by the audit team, which comprises of any member of the audit team. It may be a junior member, it may be the senior most member, who would be the partner who would be signing the financial statements of the company or the entity. Audit documentation is a must. Without audit documentation, if any audit procedure would have been performed but not documented, that would be considered as if that has not been performed at all. So that means it's very, very important that each and everything is documented in the audit working papers or any form of documentation which the auditor believes is necessary for the purposes of his audit. So let's see how can this documentation be really done by the auditor. First step, audit documentation, which is done in terms of various procedures which are performed by the auditor, is considered as working paper of the auditor. Now, what is a working paper? Working paper means the files. It could be an Excel file, it could be a Word file, it could be a PowerPoint presentation, or it could be a hard copy. The files which have the record or which have all of these procedures which are performed by the audit team noted down there. Such a file is called as working paper, or we can say working file of the auditor. Yeah. Now this working paper is extremely important because this working paper should have all the documentation in terms of each and every procedure. Now we discussed 4 stages, and we also discussed that everything which is performed by the auditor is required to be documented. So it would mean, and a question may come to our mind, that is it only the execution which is required to be documented, or we need to go beyond the execution and we need to note down each and everything? The answer is that at the stage when we start the audit, we would have performed planning. Planning is also something which is a part of audit. It's not something which is not really a part of an audit. And it may happen that planning was not performed at the client place. Auditor was sitting in his own office and doing the planning, which is possible. And mostly this is how audit planning is done. So even that planning is required to be documented. And once this planning is documented, that planning will also be considered to be the working paper. So planning may not have the final conclusions, because after planning, execution has to be done. But still, planning has to be documented, because if we don't document that, then once again we'll not have an evidence of what was really planned by the audit team. Okay, yeah. Second stage, execution. We understand that, of course, in terms of execution, all of these procedures are required to be documented. And on the same working papers on which various procedures would have been performed by the auditor, auditor would also be required to document the conclusions. Conclusions in terms of all of these activities. And on the basis of the procedures, there could be various types of conclusions. Conclusions could be in the form of achievement of desired objectives. Say, for example, sales were verified by the auditor, and for verification of sales, a sample of 50 transactions was picked up. All the transactions were checked in respect of invoices, in respect of contracts, and in respect of, say, bill entry, etc. Everything was done and everything came out nicely. Means there were no observations on the part of the auditor. Now, even this working paper will be required. Even if there is no exception, still the audit documentation is important. And in terms of the audit documentation, or in terms of the working paper which the auditor would maintain, the conclusion would have to be noted down in the working paper itself, wherein it will specify that on the basis of all of these procedures which have been performed, there was no exception, or means there were no observations on which certain reporting requirements may have to be analyzed by the auditor. Okay, clear on this? So this was briefly about the understanding of this documentation. Now let's understand few terms in terms of audit file. So what is an audit file? Audit file is something which we can say comprises of all of these working papers. So it may be the data which is stored say on cloud, it may be the data which is stored on say server or say any external hard disk. So it could be any form of documentation, or it could be a hard copy working file. Generally you would have observed that you are carrying a lot of hard copy files. Yeah, and for large clients there could be number of hard copy files which you may be maintaining, and that is because of multiple audit procedures which increases the volume of the documentation. So all of these are nothing but the audit working papers, or we can say the audit files. So all of these form part of the audit documentation. Okay, moving further, as we discussed that this audit documentation is something which will go hand in hand with the audit procedures. So when do we need this audit documentation? Audit documentation is required to be performed at every stage of audit. Now during the course of audit, auditor may also have certain observations. For example, auditor tested the payroll, and after he tested the payroll, he found that the required documents for a couple of transactions he picked up in terms of salaries of the employees are not available, because it will take some time for the management to retrieve the data and share with him. And in certain samples, he found some errors which may or may not be rectified by the management, which is not yet decided, because that decision is still pending and which will take some time. Now, once again, a question arises as to how do we document it? Or do we really not to need to document these type of things? The answer is once again yes. Audit working paper will comprise of everything. If there is something which is outstanding, that should also form part of audit working paper. And if there is something which is leading to certain observations, that should also become part of the audit documentation. So that means that can once again not be excluded from the audit working paper. It may happen that certain observations which have been noted down in the working papers may actually get clarified. For example, in the samples of salaries, say some errors were observed by the auditor and which are later on discussed with the management. And when those were discussed with the management, so the management clarified, and auditor then really understood that these were not really an error. It was about lack of understanding on the part of the auditor, or say lack of proper explanation, which was not available with the personnel who was dealing with the auditor earlier. And it's about the senior management which got involved, and they explained all of these things to the auditor, on the basis of which auditor is now assured, or maybe some additional documentation is provided to the auditor, on the basis of which the error which he found earlier was not really considered to be an error, but that was ordered. Now, do we need to document this part as well? The answer is once again yes, that even this part will be required to be documented. And how do we document this? Let's suppose in the audit working papers, if something was documented earlier, say as an observation, and further explanations resulted in removal of those observations, so then the auditor will put that down in his working paper, that this is something which lead to an error, and on the basis of the clarifications which were received, or on the basis of additional documentation he reviewed, there was no observation, and which may then come down to closure of the working paper in that respect. Secondly, it may also happen that after the final execution on the part of the auditor, say once again on this salary data, there are certain matters which the auditor believes will form part of his final documentation as an observation. Means those observations are definitely in errors and all the procedures have been performed. Even the discussions have taken place with the management, and it's finalized that those are really errors in the financial statements. Now, once again, a question arises: how will the auditor document all of these points? Now, in that respect, auditor would generally maintain a separate document which will comprise of various points which are in the nature of errors or observations on which auditor would take a decision whether to report such matters or whether to report certain such observations in his audit report or not. And that's why auditor would generally create a separate document which may be known by different names. Some of them may call that to be an observation memo. Some of them may call that to be a document of significant matters. Yes, so there could be any name which may be assigned to any of these working papers. Yeah, important aspect is that all of these has to be documented in a manner which is readily available to the auditor and which he can then finally conclude and link all of these aspects with the audit report. It should not happen that there is any audit working paper on which conclusion is not drawn and its final assessment in terms of its impact on the audit report has not been documented. Because if that is done, then the entire objective of audit will not be achieved. Why? Because let's suppose, say an auditor verified property, plant, and equipment. Now, property, plant, and equipment, you can say, was 20% of the size of the balance sheet of the company. And auditor didn't find any observations, but still the conclusions were not documented in the audit working paper. And if the conclusions are not documented, then the auditor will not be able to finally assess what is going to be the impact of this PPE on the audit report. Correct? Say, along with this PPE, there is another working paper on the loans which are given by the company. So, company has given certain loans. Now, on these loans, there have been certain observations which the auditor believes should be adjusted in the financial statements, which the management has not done. Then the auditor will have to analyze whether those adjustments are material or not material. Because if those are material, then the adjustments are necessarily required to be made. Otherwise, those will have reporting implications. Now, in respect of both of these items, PPE and the loans, all the documentation has been done except the conclusions. And because the conclusions have not been documented, so somehow the linkage of both these items or the linkage of the procedures in relation to both these items may not get established later on. Why? Because if somebody will look at the working papers of PPE and loans which are given, he may not be able to establish that connect with the working paper on final reporting by the auditor. Or we can say with the final audit report which the auditor would have issued. Correct? Yeah. So that's why it becomes extremely important that each and every working paper should have a conclusion and should have the linkage with the audit report which has been issued. Otherwise, once again, it will have this deficiency of something which is documented but not documented properly. So it's not only about the documentation. It means, therefore, that the documentation should also be done in a proper manner. Okay, yeah. So now let's try to understand how should this working paper be really prepared in respect of any item which is tested, or in respect of any area which is audited by the auditor. The audit working paper, or you can say this documentation, first of all should start with the objective. For example, if sales promotion expenses are tested or being tested by the auditor, and he is also preparing a working paper for this. So the working paper should first of all start with this subject, sales promotion. Second, it should have an objective. Objective means, why is this work performed? What is the reason of testing, or what is the reason of performing procedures on sales promotion? So that somebody can understand that this was tested and this is what it was, this is why it was tested. Number one. Number two, it should also have the audit procedures. In terms of the audit procedures, we can say this is how audit procedures may be documented. So what I can do is I can just try to create a sort of sample working paper for the purposes of our understanding as to how this working paper should really be prepared. So let's see. So we are looking at sales promotion. So this is how the subject will start. Then the auditor will put down the objective. So he will write what's been the objective of auditing the sales promotion. And this is something which will flow from the audit planning that he would have done, because on the basis of planning, he would have got the objective. Then comes the procedures. Now, these are not only the procedures which are performed, these are also the procedures which are planned. So you can say it also works as a guidance or a kind of checklist which is available to the auditor, and on which he is now required to do the execution. So the auditor will put down the procedures. Now, what can be the procedure for sales promotion? So auditor will say that he will scrutinize the ledger of sales promotion. Then next procedure could be, auditor can say that auditor will establish the linkage of this expense with sales. Means what's been the cost driver in terms of this expense. Third, auditor will then try to perform some sort of analytical procedures in respect of this expenditure. So we can say there are 3 procedures which he will be required to perform. So once these procedures are documented, so it will be as if auditor has performed all of these procedures. Correct? Fourth will be the actual testing. So that would comprise of the data. Data that all of these work has been performed. So it will contain the samples which the auditor would have selected and various line items against those samples. And this will also have the tick marks, or you can say some remarks of the auditor in respect of all of these samples which would have been tested by the auditor. Correct? Now, once all of this is done, auditor may have some observations or may not have some observations. Some of the observations will be brought out in the remarks, but some of the observations auditor may want to carry forward in terms of discussions with the management or discussion with the senior team members, or say in terms of final reporting by the auditor. So that's why next thing which the audit working paper would cover would include conclusion. Means on the basis of these procedures which have been performed, whether this objective has been achieved or not. Yeah. So this will comprise of conclusion and if the conclusion will have any such matter which is required to be taken for reporting or which is required to be included in the final report, then some sort of that linkage should also come here. Maybe auditor can create another document which may be known by the name of, say, summary of significant matters. Let's suppose auditor is preparing another document which is called by this name. Now what will the auditor do? In the conclusion, if the auditor would have any observation, auditor would say that matter is taken to summary of audit observations. Yeah, or we can say this SSM. Matter is taken to this document. So what will happen? Each and every working paper of the auditor will be having a linkage to this document, which will then be at the last analyzed and assessed by the audit team in terms of the reporting requirements. All right, clear on this part? Yeah. Okay, so in the meantime, I have got few queries. I'll just get on to those queries. So Sumit is asking, audit documentation is the asset of the auditor? I won't really say it's an asset of the auditor. This is something which is a duty of the auditor or the responsibility of the auditor. And once this is performed, this may become an asset of the auditor, or you can say this may avoid any liability on the part of the auditor. Because if this is not available, then its non-availability may definitely become liability on the part of the auditor. Okay. Pradeep is asking to repeat the procedures. I'm not sure which procedures you are asking, if it's about some of these points related to the audit documentation, and if it's about procedures related to this data. So these procedures could be anything. So we don't really need to focus on these procedures. These were only illustrative. You can have any item which may be tested through various type of procedures. So you can put it down in any manner. Okay. Sumit is asking, sir, it's been provided by SA 230, or does it depend on a case-to-case basis? See, when it comes down to the audit documentation, so SA doesn't give you any format. Okay, and once again, this format which I have created for you is not provided by any SA. This format could be in any form. So maybe you can just put down the procedures over here, objective over here. You can have conclusion in a separate document. Important thing is that the audit documentation should comprise of all of these aspects. Till the time you are taking care of all of these things in any format which you want to create, it's absolutely fine. If that is missing, then it may become a problem. Yeah. But generally, if you look at the good practices, then this is how audit documentation should be done, so that you can have good linkages. Yeah. So for example, if you would be preparing your notes, you would be generally noting down few points, and once you note down few points, some of the points you will mark as important, some of the points you will say are not so important, some of the points you will believe, no, these are not really understandable till the time I get on to some examples. So you'll give the reference of examples, and that is how you'll just keep revising. And before the exam, what will you do? You will just earmark, you'll just note down certain items which are necessarily required to be revised, because you'll remember that if I don't revise all of these points, I'll forget. Yeah. So this is all about preparing a document which is best understood by that person and which is then best finally assessed by that person. So same is the case of this documentation. It's up to the auditor, but it should be such that which leads to the final objective of the overall audit. Okay. Okay, now in terms of audit documentation, another thing which the auditor is required to consider is about the assembly. Now, in an audit, generally there would be a team. Audit generally is not performed by a single person, it is generally performed by a team. And that's why when all of these team members are preparing the data, preparing the working papers, it's very important that all of these documentation which remains scattered till the time audit is not completed is put down at a single place, which is also called as assembly of the data. Now, this assembly of data again should be in a way which is easily understandable and which can have linkages to various items of the audit procedures in terms of various items of the financial statements. Secondly, this audit documentation should also be completed by the audit team before the audit is completed and by the time financial statements are issued. That means auditor has given clearance on the financial statements. There could be certain administrative aspects related to the documentation. Maybe some of the working papers are required to be, properly put down in a server, or maybe on a cloud, or maybe on the softwares which some of the large firms follow. So it's all about hygiene matters, which at times are allowed to be performed even after the audit opinion has been issued. But it should only be limited to the hygienic matters, or you can say it's more of the administrative matters, which audit documentation may cover even after the audit is completed. But as far as documentation of any procedure, as far as documentation of any conclusion, anything which has got reported in the audit report, all of these things should be completed by the auditor before the audit is completed or before the final opinion is issued. So that means working papers should have such references accordingly. These items should not come down to a point when the audit gets completed and then the documentation starts, which some of you might have observed. Yeah, so practically you find this challenging. Practically you see that the audit has been going on, and along with the audit, documentation is not going on. And once the audit is completed, then the documentation starts. And in most of the cases, documentation doesn't start at all. Yeah. So this is again one aspect which this auditing standard requires and which is necessarily required to be followed by the auditor. Okay, clear on this? Yeah. So now we can look at one example to discuss about some of the situations which may arise during the course of our documentation and how should we really handle all of those situations. So we can look at some of the examples now. Okay, so let's suppose a company ABC is getting audited. Okay, yeah. Now for this company, planning has been performed. Planning is all done, and execution is all done. Execution is all done, and now the stage is of the reporting. So that means the final report is being discussed. Various observations are under discussion with the management. During the course of these discussions, many changes have taken place in terms of the procedures which were performed earlier and the additional procedures which were performed by the audit. And because of which, the numbers in the financial statements also got updated, which means earlier, let's suppose revenue was reported to be say 110 crore. Now with the revision or with the adjustments which have been made in the financial statements, see the revenue amount has come down to 109 crore. Okay, yeah. Similarly, there are various other items wherein certain adjustments have been made, and the audit took say approximately 2 months to be completed. So it's been 2 months which have been it's been 2 months since the time audit started. Now there are many working papers which require a lot of changes in terms of these adjustments, because all of these adjustments are taking place at the final stage of the audit. Now a question arises that because of these adjustments which would have taken place at the last stage and on the basis of which final audit report has been issued, what should this auditor do, or what should the audit team do in terms of having the final audit documentation? So we can just sort of create a stage. Say we are on 10th of May, yeah, and 10 to 12th, all of these adjustments are being passed. So 2-3 days it has taken for discussions and convincing the management to make the adjustments. All of this is done, and once this is finalized, audit team again doesn't have too much time because it's a large client, so they will have again a couple of days to finalize everything. So 14th of the May, financial statements get ready and the audit opinion is also issued on this date. The audit team is a big size team. There are many working papers, and because this audit opinion is getting issued on 14th of May, now the question arises that in respect of all of these adjustments which have taken place, during this course of 3 to 4 days, how should the adjustments be made in the financial statement? So we can also try to create certain situations which are possible to the audit team, and let's try which all options would be really relevant in those scenarios. First aspect is that because these adjustments are all related to the final conclusions and the reporting matters, that's why all of the working papers in relation to various items are not required to be updated. So no updation required. No updation required at all in the working papers, because these were all adjustments made at the last stage. Second aspect. Now, once again, because all of these were adjustments related to the final stages, so that's why adjustments are required, but only the adjustments which are material, only the adjustments which are material may be updated in the working papers, and the adjustments which were not material but still made by the management may not be made in the financial statements. So update material adjustments only. Third aspect is about, and when I say update material adjustments only, that means it should be done by 14th of May. By 14th of May. Next option which is available to us could be in relation of making all of these changes in the working papers, but after some time, because audit team has been working for the last 2 months. It's been quite exhaustive, and that's why they need some rest. And after they have rested, so they can just start updation, and they may take some time once again, because it's too much stuff which has been going around. So they will need week to 10 days to update all of these things, and which can be done and documented with the date after 14th of May in the working paper. So that means updation of all points, or you can say changes to be done after 14th May. Yeah, and fourth option would be to make these changes, to make these updations, and to make sure that all the work papers are finalized with everything by 14th of May. So that means all updations all by 14th of May. So out of these four options, let's see which option would be the right way to deal with the audit documentation in such a situation. So over to you. You may also try to just attend this and let me know which options out of these you would consider to be the most appropriate one. We will also now move on to the solution. So now, as we discussed, that by the time audit opinion is issued, auditor should ensure that the working papers are updated and they are speaking the same language, which should be done to ensure that the final report is in line with the audit working papers, and which is possible only with the fourth option. So if you look at option number 1, 2, and 3, it will not really help. Why? Because to say that updation is not required or to say updation can be done after the audit opinion is not acceptable. However, one may have an argument that if the updation is made only for material items, what is the problem? Because audit is all about looking at the materiality, and audit is all about focusing on the material items which are then adjusted, and if that is good enough, then there is absolutely no problem. Yeah. Now in this respect, one may agree with this argument, but in our situation, all of these adjustments have taken place, and all of these adjustments which took place were not limited to material. Even the immaterial adjustments have been made by the management. So that's why when somebody will look at the working papers, the numbers will not tally. Numbers will not match with the numbers which have gone out into the financial statements. And that's why it's important that it's not only the material adjustments which are made in the working papers, but also about all the adjustments, if those have really formed part of the audit. If those were ignored at all, then absolutely there was no need to update the immaterial adjustments. But if immaterial adjustments have been passed, that's why it will be important to ensure that each and everything gets updated with the working papers. Okay. Amit is asking, sir, on which basis auditor needs to adopt any of the four options listed by you? I think we have discussed about this, and the basis once again will be the understanding of various auditing standards. So currently we have discussed only about audit documentation, but we are not limited to audit documentation. There are various auditing standards. Once we are through with all of those auditing standards, you will understand the various aspects which are required to be considered by the auditor. Currently, we are saying that by the time audit opinion is issued, auditor should ensure that he is ready with his documentation, or his documentation is in line with the final opinion, number one. Similarly, you can go to the auditing standard on materiality, which may talk about focusing only on the material items, and which may allow the auditor to not document some of the immaterial adjustments which have not been passed, or maybe take care of those immaterial adjustments in a different manner. So when we'll come to those auditing standards, we'll also get an understanding about them. All right, clear on this? Okay, so with this, okay, so this was all about audit documentation. So with this, we also come to an end to the standard on audit documentation. If you have any questions, any doubts around auditing standard on audit documentation, you may let me know. And we are then moving to our next auditing standard, SA 250, which is about consideration of laws and regulations. Yeah, so I'll just change the presentation now. In the meantime, let me just go through some of these points. Okay, then Amit has one more query. Amit is asking, sir, what if the auditor wants updation, but the management refuses? Does the auditor need to qualify the report? See, audit working papers are the files of auditor. Why would the management refuse? Number one. Second is, even if the management refuses, management is not required to do anything. It's only the auditor who has to do this. Yeah. So there's again no linkage of this statement that management is refusing to update the working paper. Let's suppose if you are taking this session. Okay. Let's suppose if you are taking this session and you are noting down whatever we have been discussing. Would this really be a problem to me? No. Why? Because I'm not really bothered with this. So you can say you are the auditor, I am the management. Why would management be concerned with the audit of my working papers? Yeah. So management would be concerned, or you can say management may refuse to update the working papers on your behalf if you reach out to the management. But if you are doing your own work, management won't say no to you. Okay, and auditing working papers are required to be prepared by the auditor only. It's not the management who will prepare the audit working papers. So there's absolutely nothing of this sort which will ever arise. Sumit is then asking, sir, audit documentation is required for how much time frame? See, audit documentation should be kept by the auditor generally for generally for the time period, and generally for the time period till the time books of accounts which the management maintains, because this may go hand in hand with the books of accounts which may be required to be analyzed. That's why it's generally seen as a practice also that audit documentation is kept for a period of 8 to 10 years. Generally, this is the practice which is followed. And these days we are on virtual world, and because we are on virtual worlds, that's why most of the documentation which goes on this platform of say cloud or maybe the servers, these stays for a long period of time, because auditor may at times may require refer to something which he did 15 years back. So this is not only required for the regulatory requirements, it's also for the purposes of references. Yeah, isn't it? So there are a lot of things which the auditor can gain out of something which he may have done, say 10 years back. I'll give you my example. So there are certain audits which I may have done when I was doing my articleship, and I may have kept some documentation of that with me even today. So I go and refer back to some of those points, because practically that is how I'll be able to remember that this is how I dealt with that matter, or this is how I dealt with that situation. And that's why it's also a kind of guidance which is available to the auditor in the future years. So generally, we have not seen that the auditor would remove the documentation after say 8 years or 10 years. They continue to retain it for a longer period of time. Okay. So now moving to the next auditing standard, considerations of laws and regulations in an audit of financial statements. Now with this auditing standard, basically we are coming down to certain aspects related to execution in a way. Now, what are those laws and regulations? Let's try to understand first of all about those laws and regulations. First of all, let's try to understand this in general. What can be the laws and regulations? Laws and regulations could be any law. So, for example, a company is required to follow Income Tax Act. A company is required to follow GST laws. These are very commonly known to all of us. Or any entity is required to follow Income Tax Act. Correct? What is this? This is nothing but a law which is required to be followed by the entity. Now, if we talk about GST, if we talk about income tax, this is something which is more of a law related to a financial domain. Financial domain means which will have some assessment from the perspective of financial statements or which will have some financial perspective attached to it. But there may also be certain laws which may not have any financial perspective attached to them, which may be more of operational in nature. Do you want to name some of those laws? Do you want to share any of those laws with me which may come to your mind? Any laws? Yeah, you can just start sharing those names or those laws and regulations which you may believe to be relevant for any type of entity. Yeah, it may be industry specific or it may be not something which is specific to the industry. Let's think about those laws and regulations. Some of the companies or some of the entities which operate in a particular industry are required to follow some specific laws and regulations. For example, banks are required to follow the norms, follow the laws and regulations which are issued by RBI. Or there are various regulations which are issued in relation to banks particularly. Those laws and regulations are not really relevant to a non-banking company or a company which is not into banks, correct? Then Sumit has shared a couple of examples. Sumit is saying labor laws. In fact, labor law is something which is common to every entity. Every entity which will have people will be required to follow labor laws. And very recently, we also had this new wage code. Yeah, this is not really relevant for you right now because this has come now. This is again related to the labor laws. So new wage code has come. So this is again something which will be applicable to any entity which will be employing the labor. Then Sumit mentioned it's about the Factories Act, correct? So some of the companies which are into manufacturing may be required to follow the Factories Act, which may again require certain compliances. This is again mandatory on the part of those entities. If they don't follow this, then what will happen? It will be considered to be non-compliance of law, and because of which their business may not remain operational. They may have to shut down their business. So that means the business may come to an end if these laws and regulations are not really followed. Then Sumit has given one more example, Information Technology Act. That is correct once again. Now, what is Information Technology Act? Various compliances from the perspective of information technology. Some of the examples which are related to operations of a company could be in terms of the licenses which a company or an entity may be required to obtain. If a company wants to work in a telecom sector, it may be required to obtain certain approvals from the regulatory authority in that sector. Yeah, it also works as a license to them. So till the time they don't have a license, they cannot really operate. They cannot really start the business. Yeah. A very common example which could be related to a company could be as simple as obtaining a certificate of commencement of business. Means every company which is incorporated before it starts its business will be required to have this certificate of commencement of business. If that is not obtained, then once again it's a non-compliance of the Companies Act, if it's a company or if it's a body corporate. So that's why we can see there are so many laws and regulations which may or may not be relevant to the financial statements, but which would always be relevant to the business of the entity, or we can say the entity at large. Now, this auditing standard, that means SA 250, talks about how should the auditor take care of these laws and regulations when he is auditing the financial statements of an entity. Yeah. So this aspect is required to be considered by the auditor. Means during the course of his audit, during the course of audit of financial statements of an entity, what are those things which are required to be considered by the auditor, which the auditor cannot avoid, or on which certain procedures are required to be performed, then what should be those procedures on the part of the auditor in relation to audit of financial statements from the perspective of those laws and regulations. Okay. So for this, we should first of all understand some of these definitions. Non-compliance. So what is a non-compliance? Standard says non-compliance means acts of omission or commission by the entity, either intentional or unintentional. So that means even if it's unintentional, it's a non-compliance, which are contrary to the prevailing laws and regulations. Now let's understand the unintentional non-compliance. So let's suppose there are two persons who have incorporated a company and they now want to do some business. And they didn't have this professional qualification like all of you. So all of you are very soon going to become chartered accountant. But unfortunately, they didn't have this understanding about various laws and regulations and some of these compliances, and they started their business. 1 year down the line, they understood, they realized, because they received a notice from the regulatory authority that they didn't obtain the required approvals before commencing the business. And this was something which happened because of lack of knowledge. So it was not really their intent not to obtain that approval, but they didn't know about it and they started their business. So will that be considered to be a non-compliance? The answer is yes. So that means if there is a non-compliance, whether it is intentional or unintentional, if there is something which has not been done, which was required by the law, whether intentional or unintentional, in both the situations, it will be considered to be a non-compliance of law or regulation. Now, such acts include transactions entered into by or in the name of the entity, or say on its behalf, by those charged with governance. Now, who are those charged with governance? Board of directors, audit committee, if it is applicable. They are considered to be those charged with governance. Management of the entity. Now, what can be the management of the entity? Managing director of the company, CEO of the company, at times CFO of the company, or any other employee of the company. So they all need to perform some acts, and if those are not being done in line with what was required to be done by the law, it will be considered to be a non-compliance. Now, this non-compliance does not include personal misconduct. Personal misconduct which is not related to the business of the entity. Yeah, because that is something on the personal level which may not have been done. Okay. When it comes down to the level which is impacting the business of the organization, that is something which is required to be considered over here. Yeah. Now, moving further, in relation to the audit considerations. So now let's see what is it that the auditor is required to do in respect of compliance with laws and regulations. See, first of all, we need to understand that compliance of all of these laws and regulations is the responsibility of the management and those charged with governance. Means it's the entity's responsibility to comply with laws and regulations. That means it's not the responsibility of the auditor that the entity should comply with this. Yeah. So the first responsibility is that of the management and not of the auditor. In fact, it's not at all the responsibility of the auditor in respect of compliance of laws and regulations. Having said that, there are few things which auditor needs to check, and there are few procedures which the auditor needs to perform to ensure whether the management has complied with laws and regulations or not. Yeah. So one needs to be clear in terms of the perspective. Now, who has this onus? Who has this responsibility for compliance of laws and regulations? It's the management and not the auditor. So if there is a non-compliance on the part of any entity, who will be held responsible? It's the management and not the auditor. Yeah. But if there is a non-compliance on the part of the management or the entity, or if there is any non-compliance of this law or regulation, then it becomes the responsibility of the auditor to assess what is the impact of that non-compliance on the financial statements of the entity. And if that impact is significant, auditor needs to analyze the requirements related to the reporting of such non-compliance. So that responsibility will be on the auditor. But if we talk about the prime responsibility or the primary responsibility in relation to compliance of laws and regulations, it's not something which the auditor needs to take care. Okay. Yeah. Now, for the purposes of our discussion, we should break these laws and regulations into two categories. First category will comprise of laws and regulations which will have an impact on the financial statements, which will have some bearing on the financial statements. And second category will be those laws and regulations which will not have any financial impact, which will not have any bearing on the financial statements of the company, because those are more of operational in nature. They will have an impact on the functioning of the operations of the entity, and once again, not on the functioning of the entity as a whole. So let's take some examples of both these types. So I can see a couple of points from Sumit. So let me just get to this point first of all. Sumit is asking, laws and regulations of other countries would also apply if the entity has foreign operations, and non-compliance will also be reported in that case? Yes, of course, if that will be impacting the financial statements of the entity. Okay. Then the next query of Sumit is, duty of the auditor is to check whether these laws and regulations have been complied with or not. That's correct. Yeah. Auditor is not required to ensure compliance. Auditor is required to check whether the compliance was ensured by the responsible personnel of the organization. Okay, clear on this? Okay, now coming back to those two categories. Some of the very simple examples which you can pick up about the laws and regulations which will have an impact on the financial statements of the company. Could be as simple as Income Tax Act, could be as simple as GST, could be as simple as some of these labor related compliances, these labor laws, or you can say this new direct this new wage code which has come up. Yeah, all of these compliances, all of these laws require certain financial adjustments in the financial statements. Income tax is required to be recorded in the financial statements. GST is required to be applied on the purchases, on the expenses, on numerous transactions which will get recorded in the financial statements. So that's why these are some of the laws and regulations which will have a financial impact, which can't be ignored. Yeah. Next category could be related to the operations. Now, in terms of the operations, what is it that the auditor needs to consider? In terms of the operations, auditor first of all needs to consider whether the impact of non-compliance of those laws in relation to the operations is such that it can impact the financial statements at all. And that is possible when such non-compliance may really impact the existence of the organization. How will this happen? Say a company was required to obtain a license. Some of the sectors which you'll see, for example, telecom in particular, they need to obtain certain licenses to commence the business, without which they can't operate. Or those licenses, even if those are obtained, are required to be renewed after regular intervals, if those have not been renewed. So what will be the consequence? The business cannot be performed. Business cannot be done by that entity. And if that entity is still continuing to do that, the very existence of this entity may get challenged. Yeah, because heavy penalties may be imposed on that organization. So that's why in such a situation, it becomes the responsibility of the auditor to ensure whether those compliances have been done or not. Okay, yeah. Okay, then Sumit has a point that before reporting, auditor has to seek replies from those charged with governance or management for non-compliances. I'll come to this point. Now let's see what should be the audit procedures in respect of these compliances or ensuring these compliances with laws and regulations. Now, some of these procedures will always start with obtaining an understanding. So that's why what we can do is we can now come to some of the general procedures which an auditor would always be required to perform. So let's see. See, as part of audit or as part of planning the audit, it's very, very important for the auditor to understand the business of the entity. That means obtaining and understanding the business of the entity. If the business of the entity is not understood properly, then the auditor may miss out on many things and he may miss out on various audit procedures. Till the time business is not understood, auditor will not be able to understand what could be the related laws and regulations which the entity should have complied with. So that's why, for the purposes of this essay, this understanding of business is very, very important on the part of the auditor. And when the auditor is understanding the business, with whom he will do this? He will have discussions with the management. He will have inquiries from the management during the course of his understanding of business, because when he will be discussing the business, he will also come across various compliances which the management would be required to do. And this will also require some assessment on the part of the auditor, which is beyond what the management would have done. So we can say inquiries or discussions with the entity. When I say entity, it means the concerned personnel. It could be about the management, it could be about those charged with governance, or it could be about any employee who may be handling those areas. With this, auditor would get a general understanding. Along with this, next aspect is about the industry knowledge. Industry knowledge, or you can say knowledge of laws and regulations. See, till the time auditor doesn't have the knowledge, he will not be able to perform the audit. And audit is one area which requires knowledge of various areas on the part of the auditor. Because if the auditor will not have the knowledge, how will he perform the audit? How will he check it? If you have to check something, it's very, very important that you have knowledge of checking that, or you should have knowledge of that. Only then you will be able to make out whether it's going correct or incorrect. Yes or no? So that's why next aspect on the part of the auditor in relation to laws and regulations will be his own knowledge, which he would have gained, and which is also about the professional knowledge which he would have studied. Second is, this knowledge should also be specific to the industry. So there are so many things which are peculiar to a particular industry, which is not really required in all the industries. So for example, retail industry will have its own peculiarities, construction industry will have its own peculiarities, then pharma sector will have its own requirements, then we can say services sectors will have their different requirements in terms of various laws and regulations. And till the time auditor doesn't have that proper knowledge of the industry, he will not be able to get down to all of these requirements. Next aspect could be related to the discussions which the auditor would have done with the management and the reading of various documents. That is all about minutes of meetings of board of directors, or you can say audit committee. See, board of directors, audit committee will always be focusing on the key areas, on the important areas. So if there have been any non-compliances which are significant, which are very, very critical, those matters would definitely be discussed in the board meetings. Their approvals which are required to be obtained, if those are still in process, some of these matters would be discussed in the board meetings. So in terms of getting a knowledge about the business of the company, about the compliances required on the part of the company, auditor will get to understand about all of these things when he will go through the minutes of some of these meetings, or he may get through some of these from the minutes of the meetings. Next, let's suppose if there have been any non-compliances. Now, we were all discussing about situations wherein there may or may not be a non-compliance, but let's suppose if there have been any non-compliance. So what will happen? The regulatory authorities will make some communications. So communications by regulatory authorities. When the regulatory authorities will make some communications, say for example, they send a notice, they send some letters to the company, auditor may go through some of these communications to understand about non-compliances in particular, because these communications you will get to see generally for the non-compliances and not for the compliances. Okay. Now through these communications, auditor will get to know if there have been any non-compliances. Yeah. And on the basis of all of these understanding and the procedures and all of these documents which the auditor would have gone through, what is the next step that the auditor would be required to do? Auditor would then be required to have discussions with the management once again in respect of various observations that he would have had, because it may happen that there have been certain communications by the regulators which the auditor has also read, and he may have some observations, but management may have some action plan around it, and this may not really lead to a penalty because management may have some plan through which that penalty may not be arising, or maybe it's only about some of the communications which were made which eventually are not going to result in a penalty. And how is that possible to be understood? Only when the auditor discusses all of these matters with the management. In some of these matters, auditor may not have his own knowledge sufficient enough to take care of the audit procedures which are required over here. So that's why auditor may also want to bring in his own experts. Now, what could be an expert? Say, for example, if a new change has been introduced, like for example, I mentioned now we have this new wage code. Similarly, a few years back, Companies Act got changed. Yeah. So all the auditors were very familiar with the Companies Act 1956. And then the Companies Act got changed. Companies Act came 2013. And this was not really known to each and everybody. Not everybody was very sort of proficient or having good knowledge of this new law. Now, during the course of that year, when such changes would take place, at times the auditor may want to bring in a legal expert or bring in an expert as his team member who would be helping the auditor in assessment of all of these required laws and regulations. Now, that is again something which the auditor can do. Now, this is on the part of the auditor to decide. This is on the basis of judgment of the auditor whether he wants to do this or not. Okay, yeah. Once again, this is not a necessity. This is again something which the auditor will have to analyze, whether he wants to go with this way or whether he wants to perform on his own or not. Important thing is that auditor needs to take care that he has performed all of these procedures in an appropriate manner. Okay, clear on this? Yeah. So now moving back. Now, other than this, there could also be certain areas which the auditor may check in relation to laws and regulations. Some of these points which we have discussed were all about obtaining an understanding and were all about checking the non-compliance. But it's not only the auditor who will be doing this. As we understand that it's the responsibility of the management to ensure compliance with laws and regulations. So the other step which the auditor will also perform will be to check as to how the management has ensured compliance with laws and regulations. And what can be the various ways of doing this? To understand from the management itself how they have implemented this mechanism of ensuring compliance within the organization. So let's try to understand what could be the various things which the management may have done for handling this part. Management may have a separate legal department, may have a separate secretarial department. In fact, to have a company secretary in place is mandatory for certain companies above a certain threshold. Correct? Now, this department of the management would be the one who would take care of all of these compliances. Correct? This is one. Secondly, management would also have established certain processes, certain procedures to ensure compliance with laws and regulations. Against those processes, against those procedures, management would have also established certain internal controls of the management itself, which are required to be followed necessarily by the employees of the company, by all the personnel who are associated with the company. By doing this, what is it that the management is ensuring? Ensuring the compliance with laws and regulations. Management may also have engaged certain legal experts. We discussed that auditor may want to bring in his own expert, which is true. But the management, you will get to see, in fact, every entity you'll see will have somebody as an expert who would be advising the client on the legal matters. Yeah. It may not be in-house always, but external expert would be available with almost every organization, every individual. Correct? And why is that required? Because management is all concerned with the business. As around the legal compliances, management not have the sufficient knowledge. So once again, auditor can look at all of these areas. Auditor can perform procedures on all of these areas. Auditor can have discussions with the legal team. Auditor can have discussions with the secretarial team. Auditor can have discussions with the external legal experts which are engaged by the management to check as to how the management has been ensuring compliances with all of these laws and regulations. Yeah. Now, other than this, when it comes to the policies and procedures in case of any organization which would be maintaining it or establishing the procedures or establishing the processes, generally we find that these things are documented by the management, and these are documented in a way that these are available to the respective department or available to the respective team who can then ensure its compliance. So when the auditor would be performing his audit procedure, or when the auditor would be having discussions or inquiries with the relevant department, auditor can also request for the documentation of those processes, documentation of those policies and procedures of the organization, through which auditor will get to know, or through which auditor will be able to ensure, once again, what? Compliance with all of these laws and regulations. Yeah. Some of these compliances at times may be complex, and some of these compliances which are significant to the organization may not be available or may not be known to each and every employee of the company. So that's why generally what we get to see is that the operational compliances and which are significant to the organization as a whole are best understood when the auditor discusses those matters with the senior management, on when the auditor would have his discussions with those charged with governance. Because through that, auditor would get to know the compliances as well as the requirement of having those laws and regulations in respect of the company. Yeah, clear? Sometimes management or an entity may also have a internal audit department. And internal audit department is also somebody who will be facilitating the board of directors, or you can say the audit committee, in terms of ensuring compliance with laws and regulations. Why? Because it's the responsibility of the management, it's the responsibility of those charged with governance. So that's why they may set up a separate internal audit team which will be taking care of all of these areas. So there again, what is it that the auditor can do? Auditor can have discussions with all of these team members, with the internal audit department, or maybe the management has engaged an external internal auditor who would be performing these areas, who would be performing the procedures. So auditor can have discussions with them. Auditor may also have access to their reports in respect of all of these matters, which will help the auditor to establish whether all of these compliances have been done or not. Clear? Yeah. Now, these were all about the procedures of the auditor in terms of the laws and regulations. Now, once these procedures have been performed, now what is it that the auditor is required to report on? What is the responsibility of the auditor in respect of the reporting requirements? So let's try to understand about the conclusions which may be drawn by the auditor. And once the conclusions are drawn, what is it that the auditor needs to report on? Now, this is again something similar to what we see in terms of any other conclusion which is drawn by an auditor. When it comes to non-compliance, now we'll be talking about the non-compliances. When it comes to the non-compliance of the law or regulation by the auditor, the auditor needs to check what has been the impact of that non-compliance. Correct? So that means if the auditor comes across a situation wherein there has been a non-compliance, he would first of all assess whether the impact of that non-compliance is material or not. Now, what is material? This is again something I'm sure all of you would know, but we can discuss about it. Material is something which is significant, or you can say if the impact is material, if the impact is significant enough through which auditor believes that he would not be able to give the true and fair view, or due to which he believes that the true and fair presentation of financial statements will not be possible, then such an impact is considered to be material. Yeah, and auditor, as we all understand, is required to focus on the materially impacted items, or the items which have impact which is material in nature. So that's why here again, auditor will have to cut down his assessment into two parts: those non-compliances which will have a material impact on the financial statements, and those non-compliances which will not have a material impact on the financial statements. Now, once this is done, what will be the next step on the part of the auditor? Next step on the part of the auditor will be to have discussions with the management. So auditor will discuss that this is something which I have performed. On the basis of performance of my procedures, I came across this observation, which to my knowledge will have an impact on the financial statements, and that would be material. So that's why this should now be adjusted. So there should be an adjustment entry, maybe an adjustment entry for penalty in respect of that non-compliance. Yeah. On the basis of discussions with the management, a final conclusion will be drawn and final reporting requirement would be understood. Along with the management, auditor also needs to make a communication about these non-compliances to those charged with governance. And when it comes to communication of these non-compliances to those charged with governance, it will come down to those areas which are material in nature. Because during the course of the financial year, which may be under audit, we may get to see that there are a lot of non-compliances which may have taken place. For example, TDS is required to be deposited by the company on 7th of the following month. Okay, but this was not done. Only in one of the sample which the auditor found, only in one. This was not done. Otherwise, throughout the year, in respect of all the samples which the auditor tested, auditor found that TDS was deposited on time. Yeah. And even if the TDS was not deposited on time, the amount of such a deposit was insignificant. Secondly, interest was also paid on that late submission. Yeah. Now, in such a case, what should an auditor do? Should an auditor think, no, this has been a non-compliance of law. The law has not been complied properly. Its due date was 7th. It's been deposited late. So it's a very severe matter. Can the auditor really say that? The answer is no. Because at times it may happen. At times, because of the operational challenges, because of certain administrative challenges, TDS may not have been deposited on time. And on which management has already paid the interest which is required to be deposited. So does it really have an impact on the financial statements of the company? Not at all. So do we really think that auditor will have some reporting obligation around it? Will it really have any reporting implication? Not at all. This will not have any reporting implications. That's why auditor should also not go down that path. Yes, if the auditor wants, then auditor can note down some of these observations for his own purposes to be taken care of in the next financial years. And yes, this will also form part of audit documentation. There's no doubt about it. But when it comes to the reporting requirements, it will not be required to be reported by the auditor in the audit report. Why? Because this is not something which is significant in nature. This is not something which is material in nature. Okay, clear? Now, moving on to the next item, and that is about having a significant impact on the financial statements. Now let's see how will that be assessed. So let's suppose during the year there has been a non-compliance of any law, due to which penalty may be imposed on the company. Okay, due to which penalty may be imposed. So by the time financial year is ended, by the time audit is completed, no penalty has been levied. But as per the legal requirements, as per the law, that penalty may arise at any point of time in future. And if that penalty is levied, its impact will also be significant. Correct? Now, what do we call this type of non-compliance as? This may have a bearing on the financial statements. Yeah. Now, in this case, let's suppose there's an argument from the management that if the penalty was to be levied, this may have got levied by now. And by the time the audit is also getting completed, there is no penalty. So there should not really be any discussion on this matter because it's done, it's over. Now, in this case, a careful analysis is required on the part of the auditor. Auditor needs to assess carefully in terms of its impact and its likely impact in future periods also. If the auditor is of the view that this may have an impact in the financial statements, which may not have arisen actually, because our regulatory environment is such that even if a penalty is levied, it may come to, or it may get communicated to the entity maybe few months later or maybe 1 year later. Yeah, depending on the type of non-compliance which might have taken place. And many of the penalties may come or may get communicated many years later. So this is something which is commonly seen. Now, therein it becomes important on the part of the auditor to assess carefully about the likely impact. If the auditor believes that its likely impact is going to be significant enough, then the auditor may require the management to make adjustments in respect of those penalties or the non-compliances. And if that is not done, that may have reporting obligations on the part of the auditor. But if the auditor believes that this is not the one which will have any likely impact also in the future periods in relation to the year which is audited, then the auditor may not have any reporting obligation. But even in that case, the documentation of the auditor should take care of this matter. So now we are once again going back to that auditing standard, that even though there is no impact in the current financial year and the auditor is of the view that this is not going to have any likely impact in the future financial years, this is something which will form part of the audit documentation, and the auditor will have to give a conclusion, the reason for the conclusion. So that means auditor will have to close it in his files properly as to why he has done this, why he has taken this view, what has been the basis of coming to this conclusion. This is something which is very, very important on the part of the auditor. Yeah. So that means one thing which we now understand is that it's not necessary that when there is a non-compliance, it will get documented. Even if there is a non-compliance, and even if that is not material and for which impact is not going to be there in the future years, auditor needs to close it appropriately in his audit working papers. Okay, clear? Next, in terms of having discussions with those charged with governance, once again we have a separate auditing standard which deals with this. Those charged with governance means the board of directors or the audit committee, as is applicable in case of company. Generally, you will find that auditor will discuss non-compliances of laws and regulations with those charged with governance. Why? Because generally, these matters which are related to law or regulation are considered to be significant, are considered to be of risk areas for the auditor. And that's why generally the audit committee meetings, generally the board meetings, which the auditor would also be participating in, will have a discussion on these areas as well. Okay, clear? Yeah. Now, we can take one example to understand about some of these things that we have discussed. Okay, so let's take one example. Say during the course of the audit, auditor performed procedures, and auditor found that there was some non-compliance. There was some non-compliance for which there could have been a penalty, and the penalty amount we can say could be, say, 25 lakhs on the company. So this was non-compliance number 1. Second, Along with this, auditor also found some operational challenges in terms of non-compliances, again from the perspective of laws and regulations, but which did not have any bearing on the financial statements of the company at all. Because these were more of the procedural related compliances, not having any impact on the financial statements of the company. Now there again, if we look at those non-compliances, we can say these were related to procedural matters, and we can say no impact on the financial statements. So there have been 2 compliances. Now, as around this non-compliance of 25 lakhs, this has been appropriately recorded in the financial statements. So this has been recorded in the financial statements. Means the adjustment entry for this has been passed in the financial statements. Now, as regards both of these matters, let's see what are the various ways through which both of these matters would be dealt by the auditor when it comes to making the communications with those charged with governance, and when it comes to having the reporting in respect of these matters in his report. Yeah, so I'm giving you certain options, and we may then discuss as to how all of these items will be dealt with. So when it comes to matter number 1, this should be communicated to those charged with governance. So this should be communicated to those charged with governance. And matter number 2 is so what I'll do is I'll just instead of writing this in full, I'll just write the key points. So matter number 1 should be communicated to those charged with governance. Matter number 2 is not required to be communicated to those charged with governance. And reporting of matter number 1 should be there in the audit report. Correct? So this is option number 1. Option number 2. Because it's a non-compliance, even though it's related to the procedural matters, even though it doesn't have any impact on the financial statement, but still it should be brought to the knowledge of those charged with governance, and auditor will have a responsibility to do this. Yeah. So 1 and 2 both should go to those charged with governance by the auditor. And if the auditor is reporting on these matters in the report, then the audit report should comprise of both these matters. Means both these matters should go to the audit report. Okay, clear? Option number 3. Option number 3 says that there has been a non-compliance, but this non-compliance has been adjusted in the financial statements. So that's why audit report should not have any reference of this. Not required to be reported in the audit report. Neither this nor this, because this anyways is not material. And as regards the communication to those charged with governance, so the one which is having a material impact, material, why? Because this was considered to be material from the perspective of the auditor. So this should definitely be communicated to those charged with governance. So those charged with governance should get the understanding from the auditor in respect of this. So I can see some of your queries related to this one. I'll come back to your queries. Let's get done with this, then I'll come back to your queries. Okay. Himanshu, Sumit, I'll come to your queries. Okay, now in this case, can you tell me which one out of these options would be the correct one? Out of these options, for our purposes, which option should be considered to be the most appropriate in the given situation? Let's try to assess this. Yeah. So when it comes to option number 1, so we are saying reporting in the audit report. But when it comes to reporting in the audit report, why do we report something in the audit report? When its impact is material and it's impacting the true and fair. But if there is a penalty which has been recorded in the financial statements, do we say that it's something which will impact the true and fair view? Not at all. So that's why option number A is not possible. And with the same understanding, actually, option number B will also not be possible. So what should be the correct option? Option number C. Why? Because audit report will not have any reporting implication, but yes, because this has been a matter which was significant during the course of the audit. So that's why this should be communicated by the auditor to those charged with governance. So it's all about having discussions. So when the auditor is reaching out to those charged with governance, so auditor is not complaining about anything. Auditor just bringing out this matter to the knowledge of those charged with governance. All right, clear on this? So let me just get to your queries now. Okay, Sumit gave some examples of non-compliance with food safety, for example, FSI, etc. Okay, great. Then I think I have this query from Dugal who is asking from which chapter you are teaching. So it's about the auditing standards. Huh? Okay, then next is from Himanshu. So Himanshu, once again, I see this to Dugal. He's saying how to get notes. My messages are not reaching you. See, all of these points that we have been discussing, you need to make your own notes. And that's the best way to deal with this. And as around the notes, so all of these discussions that we are doing is also in the form of presentations, in the form of study material. Study material is already available to you, and the presentations will reach out to you. Okay. Sumit is asking first to discuss what should be the course of action. Should we discuss this first with those charged with governance or management? See, it's always the management first. First of all, discussions always take place with the management, and once the discussion is done with the management, and then the auditor reaches out to those charged with governance. Okay, clear? And then I think I got this response from Harshad. Harshad said that it should be option number C. Very good. That's the correct option. Option number C. Okay, so I think I have answered all of these questions. Yeah, all right. So now what we can do is, okay, Sumit has one more query. Sumit is saying, sir, if those charged with governance not clarified, then the auditor has to report. Not clarified means, see, it's not about having a clarification from them. It's all about making a communication to them, because whether they clarify this matter or not is not important for us. What is important is that if there is non-compliance and if that is going to have some impact, then that impact should get adjusted in the financial statements like this. If this is done, then it's good to go. Of course, the management should have good internal controls, processes, policies, procedures through which these things should not arise in the future. But if that is arising, there is absolutely no problem as far as audit report is concerned if that has been reported and recorded in the financial statements. Okay, yeah. All right, so now with this, we can just end our discussion on this standard as well, and we can just take a break of 5 to 10 minutes. After the break, we will continue with our discussion and we'll start with a new standard. All right, clear? I think in the meantime, you have a couple of queries around creation of WhatsApp group. I'll leave it to Jay. Jay can handle the admitting. Jay, you can take care of this query of the students, please. What have been they asking? And Harshad, you can just check your course content around the old course because this is for new course. But of course, some of the things which are there in the old course and which you can compare with the new course syllabus, and you can just feel free to attend this. All right, yeah. Just 1 minute. Right, so now we move on to our next auditing standard, and that is about SA 260. Very important auditing standard from the perspective of auditor and from the perspective of the entity also. It's all about communicating with those charged with governance. Now, before we get on to this, let's try to understand the meaning of those charged with governance, because I've seen this to be a point of confusion for many of the students. Though we have talked about this, those charged with governance quite a few times in the course of our discussion today only, but let's once again try to understand this. What is this those charged with governance? The person or the organization, for example, corporate trustee, with the responsibility for overseeing the strategic direction of the entity. What's the responsibility? To oversee strategic direction of the entity and obligations related to accountability of the entity. This includes overseeing the financial reporting process. For some entities, those charged with governance may include, that means it's not limited to, it may include management personnel, for example, executive members of governance board of a private or public sector entity, or an owner or the manager. Now, if we look at this criteria which has been specified, who would be responsible in relation to these activities? Who would have the authority in relation to all of these matters? We can say it's all about the board of directors or the audit committee. There's one term which has been used over here, financial reporting process. Some of you may be knowing about it. What is financial reporting process? Financial reporting process is about the closure of the financial statements. It's all about the preparation and the presentation of the financial statements. It's all starts with preparation of the books of accounts, comes down to the finalization of the financial statements, and which is something which the auditor is required to audit. So that means we are also discussing about one of the scenarios related to the financial reporting process of the entity, and wherein we understand it's the responsibility of those charged with governance. So that means board of directors is responsible for preparation and presentation of financial statements, which is something known to all of us. So does it mean that financial statements is not the responsibility of the auditor? Absolutely yes. And this is again one area over which at times we see a lot of confusion. At times you get to the client place and the management asks you to prepare the financial statements. Even though you are the auditor, management would ask you to prepare the financial statements, which is not true. And which is not right to be done. Preparation of the financial statements is the responsibility of the management. What's the role of the auditor? What's the responsibility of the auditor? Not to prepare it, but to audit this. Now let's understand who can be the management. The management, we can say, involves the persons with the responsibility for conduct of operations of the entity. And management, as we have discussed, would generally comprise of the managing directors, or you can say the CEOs, or the senior management of the company. So both of them, the management and those charged with governance, are considered to be responsible for the financial reporting process. And therein, the need for this standard arises. Why? Because in respect of financial reporting process, auditor is checking whether the financial statements have been prepared or not. Yeah. When the auditor is checking how the financial statements are prepared by the management, whether those are complying with the requirements of the auditing standards, the accounting standards or not. Therein, in a way, auditor is assisting the management in achieving its objective of having the right set of financial statements. Is that true? Can we say this? Yes. Why? Because it's the responsibility of the management, and by having this check in place, by having this audit in place, management is ensuring that whatever was their responsibility, they are able to fulfill this. And in case of the organizations which have audit committee is the one who appoints the auditor or who recommends the appointment of the auditor. Final appointment of the auditor is done by whom? It's the board of directors. So that means in the organizations wherein we have the audit committee takes up this responsibility of financial reporting process with itself. So in a way, audit committee is assisting the board of directors to that extent. And in a way, auditor is assisting both these authorities, or you can say both these bodies. Now, because the auditor is appointed by those charged with governance, I'm just using this term for the purposes of our understanding only. It's very, very important to have a strong connect between these two parties. And there should be a proper communication channel between these two parties. Because only then the overall objective of having this check or audit in place, through which financial reporting process can be ensured that it's meeting the desired objective, can be fulfilled. Otherwise, it will not be possible. And that is where the need for the standard arises. And that is where we can say the standard really helps us. This standard establishes the communication channel between those charged with governance and auditor. This standard brings out those matters, brings out those areas wherein the auditor needs to have a communication to the audit committee or the board of directors. This standard also helps us to understand which all matters should be reported, should be communicated by the auditor to those charged with governance, and when, what should be the frequency. And other than the frequency of communication, what should be the mode of communication? So is it like that auditor or the audit team should keep sitting with the board of directors on a day-to-day basis? What should this overall communication channel should really look like is something which this standard helps us to understand. Sumit is asking, so CEO, CFO would be the management? Yes, they would be the management. Okay. Then I'm seeing a lot of queries coming from your side repeatedly, and specifically from Harshad regarding this creation of WhatsApp group. I would request all of you that please focus on the class. I think you woke up early morning today. You are spending too much time on the session. So please look at this session in a constructive manner, in a concrete manner. Unnecessarily by just sending these queries repeatedly is not going to help us. Let's focus on what we are discussing in this session. What is important in the session is to have the understanding of what we are discussing. If you're just sending this query repeatedly, that means you're not focusing on what we are discussing right now. Yeah, you are focusing on what is required to be done, and whatever you require, if that is possible, that will also be done. Don't worry about it. What is now important is right now to have focus on what we are discussing. Yeah, So my request once again to all of you is to focus on what we are discussing and not to on all of these WhatsApp group, etc. Yeah, clear? All right. Sumit is then asking, sir, then who will be those charged with governance? As I mentioned, those charged with governance will be the board of directors, will be the audit committee. Okay. Now, coming to the requirements of the communication. First of all, let's try to understand what should be the matters which will be communicated by the auditor to those charged with governance. Which all matters, which all areas are the one over which communication between these two is required? And what should really be the flow of communication? So let's understand how this audit process really works. So we can say there's an auditor and this is the management. See, audit process will require a continuous dialogue or this continuous involvement of the auditor with the management. Means communication of auditor with the management will be on a day-to-day basis, will be very frequently as compared to its communication with those charged with governance. When we go to the client place and we perform the audit procedures, we'll need some persons with whom we'll have some discussions. We'll need some persons with whom we'll discuss our queries. We'll need some persons who will answer the questions, who will answer the inquiries. All of these is what management coordinates for us. That doesn't mean that the CEO will keep sitting with the audit team every time. No, it's about this team. Once again, it's a team which will help the auditor during the course of his audit, during the course of his audit procedures. And whenever auditor will come across any observation, it's not that the auditor will compile all of those observations over a period of time and then discuss with the management in one go. No. It's something which again happens to be a continuous process. So auditor will have some observations, he will discuss with the client personnel on a regular basis. And at the end, when the auditor is done with each and everything, or maybe done with most of the things, he will reach out to the management to have a discussion on those areas. So this is how communication channel between the audit team and the management works. Other than this, it's very important that the communication channel should also be there between the management and those charged with governance. Yeah. And this is something which is internal to the entity. This is not something which is relevant for the auditor. This is internal to the entity. And what is the frequency of this? How this really functions? This is not something of our use for the purposes of audit. For us, what is important is to have a connect with those charged with governance. Because one way to communicate with those charged with governance is auditor communicates to management and management then communicates to those charged with governance, which would be happening in a way. Because whenever auditor will communicate something to management, if it considers to be appropriate, would also be discussing this with those charged with governance. But there could be certain matters which, even though are significant, management may not discuss, management may not communicate those matters to those charged with governance, and which may be important, which may be relevant for those charged with governance. So that means those may be relevant for the audit committee. Now, to bridge this gap, this standard establishes a direct linkage between auditor and those charged with governance. And how is that done? For establishing this linkage, this standard brings out certain areas which will be the audit procedures of the auditor only. First is about the planned procedures. Whenever an auditor would perform his work, he would do planning. That is something we all know. What has been the planning on the part of the auditor? What has been the planned timing of the auditor? What are the planned critical procedures of the auditor? What are the areas which are considered to be significant risks by the auditor? That means the risk assessment of the auditor, which is nothing but a part of the audit planning, is required to be communicated by the auditor to those charged with governance. And the frequency of this is generally when they meet once in a quarter. So generally, the frequency between these two is to have a meeting once every quarter. And in case of a listed company, when the audit committee takes place, it's the auditor who also participates in that audit committee meeting, and that meeting is focused towards the financial report, wherein auditor will bring out all of these aspects. Yeah. In case it's not a listed company wherein the quarterly reporting is not really required to be done, we will not say that this is something which will be required to be done on a quarterly basis. Therein again, the frequency will have to be assessed by the auditor as well as by the entity. And it may be meeting twice in a year, or maybe once in a year, or maybe more than that. There's again no signal, there's no clear frequency, or there's no number of meetings which the standard will tell. This standard requires that this is something which has to be assessed appropriately by the entity as well as the auditor. Next, other than the planning part, so these two I would say were more of related to the planning part. Other than these two planning part, there could be various areas during the course of audit over which auditor may have spent significant time. There could be various areas which may have troubled the auditor. Means it became problematic for the auditor to handle those areas. Why? Because those were complex, or those required significant involvement of time from the audit side, or those were complex in terms of dealing with the management, because management was not really cooperating in those areas. And some of the areas may have some observations which the auditor may have taken to his audit report, or may not have taken to his audit report, but he would have concluded. But those were significant. Means its impact was significant, even though it's going to the audit report or not. So we can say third aspect could be about significant matters in relation to the audit. Yeah. Now, these significant matters are also required to be reported by the auditor to those charged with governance. Along with this significant matter, there's again one aspect of the audit report which we are going to discuss later. That is known as key audit matters. So, in fact, now for the listed companies, there's a separate reporting requirement in the form of key audit matters. Key audit matters, commonly called as CAM, which forms part of the audit report and which is not really in the nature of a qualification, which is all about some of these aspects that we have discussed, which are significant in nature, significant in terms of time, significant in terms of complexity, which was faced by the auditor and which will form part of the audit report. Now, these communications are required to be made by the auditor to those charged with governance. Okay, clear? Now, Because we are calling these matters to be significant, so that means we must have had some assessment, and some assessment must have some basis, and basis is all broken into two parts, material and immaterial. Correct? That is how we consider everything in respect of our financial statements, that what is material and what is not really material. So this materiality, which is decided by the auditor, on the basis of which he decides as to what is significant, what is not significant, what will go to the report and what will not go into the report, is again what the auditor discusses with those charged with governance. So that means materiality is another area which will form part of discussions or communications of the auditor with those charged with governance. All right. So let's discuss about some of these items before we move further in terms of more areas which are communicated. One, when it comes to the planned scope or this planned procedures or the planned timing of the audit or the significant risks which auditor would have assessed during the course of his planning of the audit, it's not that auditor will be discussing all of these matters with those charged with governance. Auditor will also have a discussion about both of these items with the management also. As we have discussed that each and every communication of the auditor would be happening with the management. There's no doubt about it. And generally, what you will see that before reaching out to the board of directors or the audit committee, auditor will also have a communication with the management, because it's the management with whom auditor has been dealing on a day-to-day basis. Yeah, it's over and above those discussions that the auditor is reaching out to those charged with governance. Clear? Yeah. Next, when it comes to the scoping of the auditor, scoping of the auditor means I'm not talking about the planned procedures, scope of work of the auditor. Means when the auditor is engaged by the company. So when the auditor gets engaged by the company, auditor executes an engagement letter with the company, which brings out clearly what would be the scope of the auditor, what would be the scope of work he would perform. And that's why whenever we will see these planned procedures or the planned scope, these would always be in line with the scope of work which the auditor would have agreed in the engagement letter with the management. Okay, yeah, clear on this? Some of these items will follow, but this planned timing, this planned scope is something which will be the part of scope of work which was assigned to the auditor. So in a way, what is it that the auditor is doing? So auditor is saying that you hired me, you engaged me for statutory audit of the financial statements for the financial year ended 31st March 2020. So auditor will say my planned scope was stat audit of financial statements of XYZ company for the financial year 31st March 2020. Okay, and that is how the flow of this communication starts, bringing out in clarity as to what all it's the auditor who has been doing. Okay, next aspect. Next aspect is about the significant risks or the significant items which the auditor would have observed. Now, this is something which will flow from the risk assessment which the auditor would do. Generally, we would see that there are few items like revenue recognition, management override of control, which are considered to be significant risk areas in the financial statements. Generally, you will find this. Now, because these are considered to be significant risk areas, and we are not saying that there is any problem because of these areas, we are saying that in the financial statements, these are considered to be the areas which may have significant risk and over which impact could be very significant if in terms of the misstatements or the possible misstatements. So some of those areas which the auditor would have assessed and the basis of their assessment along with assertions is what auditor communicates and discusses with the audit committee. And let's try to understand why is it that the auditor has been discussing all of these with the audit committee. See, it's the audit committee who has engaged the auditor. So that's why auditor is discussing with this body or with the audit committee that these are the areas which I am focusing on and these are the planned procedures which I have performed. Sorry, these are the procedures which I have performed, or these are the procedures which I planned for the purposes of the audit for which you engaged. Clear? Yeah. Moving further, now with this planning which is all done, that is about materiality. Now, in terms of materiality, there could be various bases which the auditor may pick up. Materiality, there's a separate auditing standard on this which we'll discuss. So we'll get into the more details of materiality over there. But materiality could have various bases. It could be based on profits. It could be based on revenues. It could be based on the assets of the company. And in terms of materiality, judgment and professional expertise of the auditor is required. That plays a huge role in terms of materiality, because materiality we cannot say is a formula driven thing. It's more of which requires significant judgments on the part of the auditor. Yeah, so it's very, very subjective. So that's why auditor will also make this communication, because this materiality actually draws a line between what may get reported and what may not get reported in the audit report. And that's why to have a clear understanding of the materiality and the basis of determination of materiality would help the management as well as those charged with governance in terms of assessment of impact on the financial statements, which will then become available to the users of the financial statements. Clear? Next aspect is about the significant matters. Now, this is something which you would commonly find or which you would commonly think that is discussed between the auditor and those charged with governance. Because generally we think that if there are any observations, if there are any problems, only those areas should be required to be communicated, or at least those areas should be required to be communicated. So I would say this is one area which is very commonly known to all of us. Yeah, because in terms of an audit, some observations will come up and those will get discussed with the management. But here again, another important aspect which needs to be considered by the auditor is which all matters should go to the audit committee or the board of directors and which matters should not really go to. Let's try to understand. During the course of the audit, let's suppose if the audit goes on for 3 to 4 weeks and there's a team of say 5 to 6 persons, including articles, including chartered accountants, or including the audit partner, who would be performing hundreds of audit procedures, and they may come up with so many observations. Some of the observations could be significant and some of the observations may not be significant. Let's suppose audit teams comes up with 20 observations which are significant, which are actually significant. Out of those 20 observations, 15 observations got closed. Got closed means they didn't get reported anywhere in the audit report. Why? Because those were adequately taken care of by the management in discussions with the auditor. Means those adjustments arose during the course of audit, but management agreed to all of those adjustments and passed those adjustment entries in the financial statements. That's why it got concluded. Nothing of that sort really bothered the audit team in terms of taking the matter to the audit report. Now a question arises, and now this is something which again auditor will have to assess. This is on the basis of judgment of the auditor, that out of 20 matters we are seeing 15 were closed and 5 did not get closed. So that means for 5, auditor actually did the reporting in his audit report. Correct? So those matters which are getting reported in the audit report would definitely be significant, and that should definitely form part of significant matters over here to be communicated to those charged with governments. But in respect of these 15 matters which have been closed by the management and which are not forming part of any aspect related to audit report, auditor needs to decide, and this decision of the auditor should also be in discussions with the management at times as to which all matters out of this should get communicated to those charged with governance. So this standard is not stopping the auditor from reporting all of these observations to auditor. No, it's not like that. Nobody is stopping the auditor for making these communications. But the important thing is that when it comes to the higher authority, when it comes to the senior management, or when it comes to those charged with governance, auditor cannot have discussions related to non-critical matters. Auditor would always have discussions in relation to matters which are critical in nature and which are of most significance in terms of their impact on the entity as a whole, and which auditor believes should be brought to the knowledge of those charged with governance, because that is very important from the process which is related to financial reporting of the entity. All right, yeah. Now, what will be the basis over here? So we don't really have any formula. So I cannot give you any formula. There is no methodology which is prescribed. This, as I have discussed, is based on certain factors, that whether its impact was significant or not, whether its impact was such that this may have again some impact coming in the financial statements of the next year, and that's why it's important for those charged with governance to know about it, or whether this has been a complex area and over which some internal controls can be improved, some internal controls can be strengthened, and that's why it's important to have a discussions around those matters with those charged with governance. All right, clear? So this was about the significant findings, etc. Next aspect is about adjustments. As we have discussed, during the course of audit, because of these 15 observations which the auditor had, management may have passed adjustment entries. Correct? Why are those adjustment entries passed? Because these were reported to the management by the auditor to be passed in the financial statements. That means those were really the mistakes or the errors on the part of the management. These got corrected by the auditor. Yeah. So we can say these were adjustments which were passed. There are various names which are attached to these type of adjustments. Some of the auditors call them as past adjustments. Some of them call that as audit adjustments. So different nomenclatures are attached to it. Similarly, there could be certain adjustments which the management did not pass because they didn't agree. They had a different view, and that's why those matters got reported in the audit report. That means those 5 matters. Correct? So we can say adjustments which were not passed and those were material. Correct? Yeah. Now, both these adjustments are also required to be communicated by the auditor to those charged with governance. Because the audit committee, because the board of directors should know that what have been those adjustments which have been made in the financial statements by the auditor. By the auditor means it was because of the auditor that it came to the knowledge of the management and the rectification entries were passed. So this is again something you will see as a communication which will flow from the auditor to those charged with governance. Okay. And next, and the most important aspect about the auditor would be, so I'll just clear some of these points. Independence and representations. Now on representations, again we have a separate standard wherein we'll discuss this in more detail. So I'll just touch upon these 2 points. But first point is very important. Independence of the auditor. Auditor is appointed by the management, by those charged with governance, by the company, because they want somebody who is external to the company, who is not biased with the company, who is completely independent of the company. He comes over and checks, examines, verifies transactions, records, books of accounts of the company. Yeah. So that's why such a person must be independent. There are again certain norms. There are again certain various, requirements in relation to check as to how the independence is required to be maintained by the auditor. Some of them come from the ethical requirements. Some of them come from the legal requirements. But it's of extreme importance that the auditor is independent. And that's why whenever auditor will communicate, whenever auditor will have this discussion with the audit committee or the board of directors, so auditor will confirm his independence to them. So it's not that at the time of appointment, this assessment was not done. It would have been done, but still it's an additional communication which the auditor will do. And during this communication, auditor is in a way confirming to them about his independence. Okay. Next is about representations. Now, representations is something which comes during the last stage of the audit. And even though it's more of a documentation which is done, or it's something which is in the form of a documentation which flows from management to the auditor. And even though it comes when the auditor would have performed all the audit procedures, even though this is not considered to be conclusive, still this is considered to be of extreme importance in any audit. So let's briefly try to touch upon what do we mean by representations. Representation means management will write to the auditor that this was the basis or following was the basis of preparation of financial statements by the management. And why is this required to be obtained? So it's like auditor is asking a written confirmation from the management about each and every aspect which is flowing in the financial statements. Management will write in the letter that inventory has been recognized on X basis, PP has been recorded on X basis, loans were given and that was in line with the requirements of the Companies Act and have been appropriately recorded in the financial statements. So each and every recognition, measurement, presentation or disclosure criteria of financial statements would be brought out by the management in the representation letter. And this is something which will be provided at the end, even though auditor would have performed all of his audit procedures. Yeah. Now, when the auditor would obtain these representations, what we generally see is that not all of these representations, but the key representations which the auditor would have obtained from the management are communicated to those charged with governance. And you may be thinking that, sir, at one place we are saying management is making this communication to auditor and auditor is making this communication to those charged with governance. So these two are from one company only. So basically, who are they? They are part of a company. Let's suppose this is ABC Limited. So why is it happening that one is giving some communication to auditor and auditor is giving same communication to those charged with governance? So it's about, once again, making the audit committee or the board of directors aware that this is what your management has represented to me. Okay. Secondly, this representation is also signed by directors of the company. It's not a necessity again, but it's signed by the directors of the company. We generally see this signed by the CEO or the CFO or the directors. But yes, this is again very important aspect which has to be covered by the auditor. All right, clear on this? Yeah, these are some of the points which one has to consider, which one has to keep in mind in relation of making the communications with those charged with governance. Now, next thing which arises is about the flow of communication. Now, what should be the flow and what should be the mode of communication? See, practically what you see is, we see that every quarter, in case of a listed company, there is an audit committee meeting specifically for the discussions around the audit and the financial statements or the financial results, because every listed company is required to bring out their results every quarter. Therein these discussions take place, and therein one presentation is made by the auditor to those charged with governance, to the audit committee. So in the form of that presentation, this entire discussion takes place. Yeah, but this communication which the auditor does is not necessarily has to be in writing. So idea is to communicate, and that's why whenever this communication would be going on, you will generally see that this will come out in the form of a written communication only. Yeah, clear? Because otherwise, later on, how would one establish that what was the mode of that communication from the auditor to those charged with governance? Clear? And in the form of that presentation, which would be moving or which would be flowing from the auditor to the audit committee, all of these matters are discussed. Secondly, in terms of the frequency, though we have talked about once a quarter, it's not something which will remain limited to once a quarter. At times, some of the companies follow a practice that they will have one formal audit committee meeting, and before one formal audit committee meeting, which will go on record, some of the audit committee members may want to meet the auditor. Okay, that will also be a formal meeting, but other than the audit committee meeting. Okay, so therein again, auditor will have discussions with the audit committee, and this frequency can also be required to be increased if there are any such matters which the auditor believes that before that meeting should be communicated by the auditor to the audit committee. So once again, we do not have any line drawn in terms of having those maximum number of meetings or the minimum number of meetings. It is something which has to be decided by the auditor in terms of establishing a proper communication channel with the audit committee. And it's something which is on the auditor completely, because it's not that if the auditor will request to have a communication with the audit committee, so the audit committee will refuse. No. And once again, it's not something that the auditor should reach out to audit committee on a day-to-day basis. Yeah. So it has to be a balance between these two, and accordingly, this entire communication channel should really flow. Yeah. The idea is that whatever is communicated should be communicated in a proper manner. And on the top of it, one aspect which will keep discussing everywhere in the audit will be about documentation. Now, each and every aspect around this communication is required to be documented by the auditor, because at one place we are making all of these communications to the audit committee. And if we are making all of these communications to the audit committee, it's very, very important that the auditor should have all of these things properly documented in his audit files. Because if the auditor is making these communications, but by chance or for some reasons, auditor is not maintaining all of these documentation in his audit files after the communication is done, then it will also be considered to be a sort of non-compliance of that auditing standard. Yeah, that auditing standard means the auditing standard on audit documentation. All right, clear on this? Yeah. So now with this, we come to an end of significant discussion on this. My idea is really to discuss some examples based on this auditing standard. So what we can do is, because we are just running close to the end of the session, we can have a discussion now on your queries, if any. Otherwise, we'll just end our discussion over here. And in the next session, we'll start with some examples based on this, and we'll also move on to next. Yeah. So any questions, any doubts in case you have, please let me know.
Achal, we can tell students that simply these are auditing standards. So it is relevant for old and new both syllabus. So they can definitely continue with the classes. And in fact, there is very less difference in old and new syllabus, just like life insurance, company audit, and then quality review, forensic audit. Very less topics differences there. So they can continue with the same. So there is no problem. I think they're a little bit confused whether it is applicable for old or new. So they can definitely attend the session.
Yeah, definitely. And I would request all of you, you can just make communications to your colleagues accordingly. That the differences are very, very few. And even if those are the differences, you can just always make out, because you have the study material in the syllabus available with you. Yeah. So this should really help you in terms of having the discussions on the aspects related to your course. All right, so I think with this we are done, and we can also end our discussion over here. In the next session, I would request all of you to just please ensure that you have revised this standard, because we are going to discuss certain examples based on this standard, and then we'll move on to the next auditing standard. All right, yeah. So thanks to all of you once again for your time and for your wonderful participation. Thanks so much.